What's up, guys? Welcome to another episode of trading Bitcoin. I am joined by a friend of mine. Name is Ozzy, the BS Filter, also here on YouTube. Say hi, Ozzy.
What's up, everybody? Hello, fam.
I know there's a lot of you that watch me, also watch Ozzy. How long have you been had your channel now for?
It's about
6 months,
7, 8 months, yeah.
7, 8 months, right? How you doing? How about the
I
views?
love it. I love it. I had to go on a vacation for 2 months, so I kind of there's a 2 month missing, but I love it. I would never stop.
How are your views doing? How are your subscribers?
I was just under 5,000, and I get about 2.5, 3,000 views average. But some videos get more.
Yeah.
I just gotta stay away from politics, really.
All right, man. Yeah, because I've been on your podcast when you first started out, like second or third episode, right?
Yes. You went on twice. Awesome. They helped a lot, by the way. Thank you.
Yeah, no problem. Because you gave me a lot of credit in like your very first episode or two for even starting your channel.
Boost, yeah.
Yeah. So we're actually about to go off to the Laker game in a little bit. Shout out to Cindy for hooking us up with some tickets. And we're going to be at the Laker game tonight. So just stop by, pick me up, and wanted to do a podcast. So let's get the show on the road. Let's talk about the price, and then I'll see if I have any time to get with your Q&A. As usual, if you want to understand trading, since this is an educational channel, please go to the Liberty Life Trail website. The reason it's called Liberty Life Trail is because it wasn't supposed to have anything to do with trading. It was going to be like a lifestyle blog about diet and exercise and travel and a little bit of finance. But hey, life doesn't always work out the way you plan. And now it's a straight up cryptocurrency and trading channel. And in the Learn Trading section, you have all of this, particularly focused on section 6, which is the advanced version, which is what I generally use to trade the market with the time indicator. All right, and for additional information, please check out the consulting section. And if you are interested in attending any of my trading sessions, this is why I'm here in LA right now, is because I'm doing a seminar in LA on Saturday. Also check out the other ones that are now definite with the dates, and there is information at the bottom on how to reach me. All right, let's go straight to the markets. Here's the weekly chart. A few hours ago, the weekly chart was looking very strong. I believe it even went green on the current. I believe it even went green on the current candle. However, we are starting to pull back. Sorry, guys, I have to mute for a second. Now, however, we are starting to pull back a little bit to the downside now. And let's see how this candle finishes. I believe we just started a new daily candle, but the weekly candle still has a couple of days to go. The last few hours are showing some weakness, but the weekly chart is not indicating any of that. The weekly chart actually remains in bearish territory. And you can see that we are still working on a new weekly low close, which is not a good sign. Of course, the good thing is that we're staying above 7,600. And the good news is that it's still looking like a reversal candle, okay? But it still has to close as a reversal candle. As we have seen from the Dow Jones, shit can get ugly in a day, okay? And I'll get to the Dow Jones in a minute. Let's get to the daily chart. So the daily chart was looking great. So again, with the 4-hour chart and the 1-hour chart will give us more clarity. But a couple of hours ago, we were sitting at about 85, 8,600, which was a very, very good sign. We've now pulled back a little bit. So the daily candles are not really showing any signs of trouble yet. But also, there was a daily 9. I mean, we bottomed one day earlier than I preferably would have liked. It would have been nice to see this delayed by a full day, but hey, I don't control the markets. And this was looking great. We traded above the prior high, but you have to be careful here because if you did not time this bounce or even the bounce on the previous day, there was lots of weakness on the 7th of February because the candle closed red with a big wick to the top side. Now, trading at the bottom of the candle yesterday probably would have given you a nice trade. But trading at the top of that candle was already a bit dangerous. At this point, I would wait for a candle with a green number to trade above a prior green number for a safe trade. Again, the time indicator, those of you that are continuous, that have been watching me for a long time and read the documentation on these indicators, you know that my entry points are when candles with green numbers start trading above candles with green numbers. Only the first time, by the way. So my bullish entry would be if today is a rough day and the day has just started. If the next 24 hours is a bit rough, what I'm looking for is a close above today's, like tomorrow's trade to be higher than today's trade, basically, on the price, right? So you want to go above this green line, but tomorrow, not today, okay? So I'll definitely do a video 12 hours from now or so. I'll do a video in the morning. Now that I'm in LA and I have an apartment here for a week, I can definitely try to do 2-time-a-day videos, one in the morning, one in the evening, unless I'm like going out. But it may not be a video Saturday morning because, you know, my seminar, even though it's not far from where I'm staying. But anyway, we'll see. So the daily chart right now is currently on an absolute no trade, okay? If we start going below 7,600, then it could, you know, give you back to a short, and it could even make a lower low, right? There can always be a stronger bounce, guys, okay? Look, we had a very strong bounce here off of 9,200. We had a little bit of a weaker bounce at 7,600. We had a very strong bounce at 6,000. But that doesn't mean that we can't go all the way back down to 5,000 and have an even stronger bounce, right? I mean, there's always a bigger whale. Keep that in mind. So right now, I would say that the daily is in a no trade zone if you have not taken advantage of the bounce up to this point. This is not a time to jump in the bullish trade this second, okay? If yesterday's candle was a little bit weaker and today we were sitting at 8,000, I would have said fine, because yesterday's candle got up pretty high and we've now fallen almost $1,000 since the high. I mean, the high of that candle was what? 80. What was the high here? 86, and we have fallen to 75. So we have now fallen at. Did we really fall to 75? Yeah, we did, didn't we? No, wait, what's going on? 77. No, we didn't. We fell to 78. Okay, sorry. It wasn't, for some reason, it's not updating unless I click on it. That's a weird feature. That wasn't like that before. Anyway, it doesn't matter. So that's a big fall. If I did this video a few hours ago, I would have been very bullish. Now that we pulled back a little bit, got to be a little bit careful here because momentum needs to stay. This thing really needs to stay above 8,000. If we get back to the vicinity of 7,600 and we get stuck at 7,600 again, that's not going to end well, right? Like if we're continuously hitting the downside. So let's really see how this plays out. Here's the 4-hour chart. Those of you that are trading the 4-hour chart, the 4-hour chart is pretty neat. And I will be releasing this new code to my clients soon, definitely this month. I already spoke to my developer. We're going to finish this up and knock out the rest of it. You can clearly see how the 50-period moving average on a 4-hour chart has derailed us from going higher. 1, 2, 3, 4 candles got stuck at the 50-period moving average. Now, the good news is that you already had support right here at 75, 76. But if we go back here, this has now become weak support, right? That's what I say. Support is only strongest the first time around. This was actually a 9, telling you to be a little bit careful. It started off as a 9. So if we get back to this line, the probability of this line bouncing the price the way it already did is significantly smaller. If we get back to this line, the probability increases that we're going to drop below this line. If we drop below this line, we need the price to reverse before it gets to 6,000 again. Because if we get to 6,000 again, and I'm going to draw a nice red line right here. I'm going to draw a nice red line right here for, oh, hold on 1 second, guys. I have to check something. Man, something's bothering me. Oh, no. Happened to, hold on. W isn't syncing right, but anyway, it doesn't matter. All right, let's get back to this. This thick red line, if we go below this line, again, things are going to get ugly. I mean, we're not out of the woods yet. I mean, we had a very strong bounce, but it still makes me a little bit nervous, right? We reversed in the middle of nowhere, and if we fall below this orange line, we would need to reverse somewhere in this vicinity. If not, if we don't reverse in this vicinity, there could be serious trouble for Bitcoin, okay? And again, I take you back to the Dow, which I'm going to talk about a little bit later. It looked like a very strong bounce right here 2 days ago, and then look at the massacre today, all right? And that's an 8 candle. So tomorrow, there could be a nice 9. I would love to see a giant crash, like to here, and then reversal of the 9. Okay, it will also actually help my trade too. Oh man, I always do that. Here's the hourly chart of Bitcoin, and again, the hourly chart is on a bearish trade. The hourly chart went bearish, though no one probably should have taken on this bearish trade, mostly because you would have gone against the bullish trading on higher level time frames. But according to this indicator, once the red 2 started trading below the red 1, you do have a short trade. Now the moving average was supposed to hold it up, but we were busted right through it. Okay, we're at a very critical point right here. The 4-hour chart will not reverse at 7,600 again. It just won't. This is my rule of no double bottoms and no double tops. They are meant to be broken. Therefore, if we get back to 7,600, let's hope for a bounce in the 7,000 vicinity. But if we go below 67, 6,600, it's probably over, because you're not going to get a double bounce off of 6,000. If we get back to 6,000, we're going lower. Okay, this is how markets work. You have to understand that. I'm very rarely wrong on this one. Okay, now I have no idea which way it's going to go, but I do know I have a very high probability of expectations the moment it gets to certain lines, and I have drawn these lines on my chart. So be real careful right here. We really need 8,000 to hold. We really need 8,000 to hold. All right. Just like off the previous bounce, I believe, when did we bounce off of 7,600? Was it this? Yeah. Just like the previous bounce right here on February 2nd, when we bounced and we went up and we got stuck a little bit and started to go down. What did I tell you guys? I said, look, the bounce looked great, but the moment we get back to that zone, the moment we get back to that same zone of 7,600, that's it. It's not going to hold it again, and boom, we collapsed down. Okay. Same thing again. It could be a repeat. So we're not out of the woods yet. As a buy and holder, you're okay. As a short-term trader, you got to be real careful right here. Real careful. The good news is, if you start trading back above 8,500, boom, off to the races you go. Also, notice this little red dotted line right here. I can make it a little bit thicker. That's the setup trend line, setup trend resistance line right here. All right, right there, right? We really need a green 9 to close above this red dotted line. If it doesn't, not good, okay? Needs to stay above that, okay? Needs to get above that. That's acting as resistance right now as well, all right? That's pretty much it. I'm sorry I have not done market pulse in a few weeks. It's just all the travel makes it almost impossible. This bounce was great on the S&P 500, but look at the count. Remember, Wall Street missed this 9. I caught it, but Wall Street missed it because Wall Street requires a price flip before they can get a 9. I don't require a price flip. This is why I prefer my version of the traditional Wall Street indicator. And boom, I got the top perfectly. I couldn't call it because I wasn't watching it. But my clients could have been watching it that have this access to this code. And down we go. So tomorrow is a potential rebound situation. Tomorrow or the day after. Potential rebound situation, and don't forget the 200-day moving average. Now, of course, this is the S&P. I'm pretty sure Dow looks very, very similar. That's pretty much it. I don't have anything else. Ozzy in here in a second. Corey, please see if you have any good questions and go ahead and throw those at me. Maybe I'll get to 1 or 2 questions because I kind of want to get to the Staples Center, maybe grab a drink before the Lakers game. Going to the Lakers OKC game tonight should be fun. Other than that, that's about it. And on my usual final note, if you like to support my work and you are interested in any of the products that I use in my affiliate and referral section, a lot of these are discount codes. Some of them are just referral codes. So check them out. You know, I got TradingView here, BitMax, TorGuard, which is a VPN service, 50% off. So use the discounts, guys. And of course, Buy the Dip is becoming more popular. I love it. I love that brand. So go ahead and check those out. All right, let's. Oh, I got something with a tip.
You got a few of them actually.
All right, let's see here. Tone, could you take a look at yearly charts? Could we be in for a red year? No. I mean, we could be in for a red year, but the yearly charts are still bullish because Bitcoin is so new. All right, let me go and take a look right now at the yearly charts. Hold on.
How accurate can that be, if you don't mind me asking?
Yeah, speak up so the mic.
Oh, how accurate will it be on a yearly chart with 2017 going up as much as it did?
Well, it's not that it's not accurate. It's just that
I mean, to predict from it.
Right, because 2017 went up as much as it did, there is a lot of leeway to stay bullish, right? So it literally means that we can fall 70% or even 80% and not endanger the bullish trend. So it's not about it's not being accurate. It's about like it just doesn't give you much. It's not very useful. Yeah. There's a better term. It's still accurate. It's just not very useful in your short-term trading. All right, let's go to 12 months. All right, so there you go, right? So you're looking at it right here. Right, so here is your yearly chart, and we're on year 5 of 9, though this could be year 6, because if you treat 2009 as the first year for Bitcoin, even though we don't have any prices for it, obviously 2010 closed above 2009, which would move all of these counts off 1 year. But either way, we got a good 3 or 4 years to go. But if you zoom in on year number 5, in order to stay a green 5, simply needs to close 1, 2, 3 above. As long as we close the year above $300, the bullish trend is intact, right? I mean, like I said, it's not about not being accurate. It's about just not being very useful, right? The tricky one is going to be year number 8, which shouldn't even be that tricky, right? We'd have to close year number 8 above $14,000. So 3 years from now, we have to close above 18,000, 16,000.
And then it'll become more useful for future.
Correct, right. So, I mean, I have no doubt in my mind that we're going to get, we're going to be bullish for the next few years. At least keep the counts bullish on this trend, all right? So there you go. So there's the yearly, right? We can also glance at the S&P 500 on the yearly chart. Maybe see if the indicator is useful. Well, look at that, right? So the yearly chart in the S&P 500 almost called the 2008 crash perfectly to the year, 1 year too late, because the high came. Oh, sorry, that's the 2000 crash. Sorry, almost came to 2000 crash in the high. The 9 guy came 1 candle late, and right now we're on 7 of 9. So I am looking for a few more years of upside in the S&P 500. Let's go back to daily, which is what it should be. All right. All right, let me stop screen share. And you got any questions, Ozzy? You're here. You get priority.
No. Let's.
All right, Corey. Let's see what you got for me. Core is only scalable up to $1,000. It was designed to be small. I don't know what that means. What do you mean scalable up to $1,000?
I think he thinks that value and scalability are in correlation. They're not.
No.
Yeah, it's speed and it has nothing to do with its value.
Right. Look, the reason you scale off chain is to actually have scale. It's the only way it works. I got another question here. Tone, why don't you think BTC dump is correlated with traditional markets? It's not, guys. Bitcoin is completely uncorrelated to traditional markets. They're totally unrelated, right? Because the S&P was dumping the last 24 hours, and Bitcoin only fell a little bit in the last few hours. When before, I mean, the Bitcoin started to fall way earlier in the S&P 500 did, right? Like the 2 bad days in the S&P 500 were February 2nd and February 5th. I know you don't see my chart, but February 2nd and February 5th, which was Friday and Monday, was when the S&P 500 fell. And if we look at Bitcoin, yes, it was also February 2nd that actually rebounded, and then it fell February 4th and 5th, rebounded 6th all the way through the 8th.
It actually crashed today, 1,000 points.
Right. So, yeah, I don't think they're correlated. I mean, I guarantee you, Bitcoin is totally uncorrelated with the S&P 500. Because they're not the same people. The same people don't trade these things. They just don't.
Nobody's going to take their money out of the market, the stock market, and put it in crypto. They're two different beasts.
They're completely. All right, next. Tone, have you heard the song "Tethered" by CoinDaddy about you? I heard a few songs of CoinDaddy about me. I'm waiting for part 3 to come out. I don't think he did that yet. Tone Base part 3. I heard part 1. I heard part 2. The Eminem. Did you see that by Charlie Lee?
No.
You haven't heard that one?
Which one?
The Eminem remake about Charlie Lee selling all his Litecoin.
Okay. No, that one I didn't. I heard that one for Charlie Lee, but yours I didn't hear.
Oh. Okay.
Tether one.
Doesn't the weekly show a lower high? Doesn't that mean we're going lower? Let me go back to the weekly and see. Close the yearly now. I know you guys don't have screen share. I'll only share it if I need to. Well, that's the thing, right? What do you mean by the weekly showing a lower high? The weekly has continued to go down. The weekly has never given us a lower high because it hasn't rebounded enough to provide a lower high, right? So the weekly, right, the only thing positive in the weekly chart is the shape of the candle, but that has to translate into next week trading higher than current week. If next week does not trade higher than current week, then the bounce is kind of irrelevant, right? Like if at no time next week we trade higher than current week, I'm going to go back to being a bear of Bitcoin. Right now, pretty much the only thing that's keeping me a little bit of a bull is the shape of the weekly candle, but that has to translate into next week. Next. Why don't you think Bitcoin dump is core? Oh, yeah, I already did that one. Is it possible the S&P is bearish for the next 2 years? I don't think so. I mean, Trump is a capitalist, and this is just a little bit of a pullback because stocks got out of control, just like Bitcoin got out of control. Also, with the interest rate going up, there will be a huge rotation of bond investors into stocks. I remain a stock market bull for now, but I do need to, brush up on traditional market so I can bring you the next video. Hey, Corey, can you grab that Tour de Meester question? Because I like Tour de Meester and I have no idea what the question is other than I see the name Tour de Meester. 5,000 to 6,000 good support. No. Between 5,000 and 6,000 is terrible support because 5,400 was already support. So there isn't much room between 5,400 and 6,000, and there isn't much room between 5,000 and 5,400 because the 5,400 to 5,500 area is not good support at all because it was already support. This is what I try to explain to people. Support is only good once. The second time, it's weaker. The third time, it's weaker still, okay? So between 5,000 and 6,000 is not likely. 6,000 being a very good support is a lot more likely because it came out of nowhere and it wasn't support before. This is why the best area of support we have is 1,300. I'm kind of splitting hairs between 1,250 and 1,350. The vicinity between 1,250, yes, that's 1,250, and 1,350. That area is very, very strong support because it was never back tested as support. 5,400 was, which is close to 5,000. A little bit of a gray area there. 3,000 was, 1,800 was. All of these areas were already amazing support. So next time around, they're weak support, not strong. All right, let's get back to, grab that as well, Corey, from Corey. Nice. I don't know, different Corey. Okay, here we go. What do you think of Tour de Meester, slightly misspelled tour, but that's okay, and others who never buy stocks? Is maximalism in cryptocurrency stupid? I really like Tour de Meester's work. I really, really do. Like Tour de Meester and along with Van Zen are my two most respected Bitcoin traders in our space, okay? So they're 1 and 2, Tour and, or 1 and 1A, Tour and Van Zen. If I run into another one that I like, I'll mention them, right? But for now, it's just Tour and Van Zen. And I mean, Tour is also busy. I mean, I think he's, I mean, Tour's got a lot going on. And he's also a writer, and he's also a contributor, and he's a trader. And it's hard. So he focuses on crypto. He used to trade stocks, I'm sure, and he doesn't do it anymore. I'm the opposite, right? Like, I still trade traditional markets. I need one more market crash. I need tomorrow. I have to exit my trade tomorrow because my time decay is killing my trade right now. So I'm exiting tomorrow. If tomorrow is like today, that trade is going to be money. If tomorrow is a bounce in the stock market, then my trade is going to be well, that part of my trade. I only have 20% of my position left. It'll be a big loss, but my overall trade cannot lose money. I'll keep you guys posted tomorrow when I exit the trade. All right, next. What's your opinion of Peter Schiff? Oh God, can we please save this question for next time? I just don't have the time to get into it. I think Peter Schiff's in a bubble. I don't like the fact that he sells gold while promoting gold. I think he misunderstands Bitcoin. I think that the gold will bottom when Peter Schiff gets a class action lawsuit. All right, next. What do you think about alts? I hate alts. Will they break their correlation with? I don't know. I don't care. Maybe at a different time. What do I think about the dropping? 666 points. 33rd day into the year. Nothing. Absolutely nothing. It's not a message, guys. It's a freaking coincidence. Go back and take a look at what price the S&P 500 bottomed. Let me show you, actually. I'm going to go do a screen share. Here's the S&P 500. Man, I think it will be a long... Hold on. Let me drop my indicator. Oh, wait. Instead of dropping, I turned on the other one. Just so that it doesn't clutter the chart. 2016. Boom, there it is. 2008 crash. You want to take a guess what the price of S&P 500 was? Want to take a guess where the S&P 500 bottomed in 2009?
Are you talking to me?
Yeah.
Oh, that's too long ago, but I know it dropped bad.
There's the low. The decade low of S&P 500, 666.
Wow.
Guys, it's a coincidence. It's a coincidence, guys.
I think you're just trying to feed the conspiracy.
I am. So everyone is panicking that the Dow dropped exactly 666 points. I mean, this is the kind of stuff you read about in Della Vigilante. Trust me on this, okay?
Do you mind if I say something real quick?
Yeah.
But I mean, you got to admit, I mean, you had that day 660 points, and then Monday you had over 1,000 points, and today you had another 1,000 points. That doesn't scare you at all.
Well, no, today it was 666, I think.
No, that was Friday.
Last Friday. It fell 666. Yeah. It's a coincidence, guys. It's just another number. It's just if it wasn't for that stupid movie, like you wouldn't even, this number would be totally irrelevant.
No, I'm not talking about the coincidence. I'm talking about just in general. That's a lot of points to drop in 3-4 days.
Oh, I agree, but the number being 66 is totally irrelevant. That's totally irrelevant, guys. Stop with the conspiracy theories. Your life will be much better. Next. Okay, this is it, just these two, and then I want to get to the game. What's your opinion on the long-term outlook of the U.S. economy in regards to national debt and interest rates rising? National debt's irrelevant. We'll talk about it at a different time. What worries me in the U.S. economy is the 140 trillion of unfunded liabilities. Sooner or later, the cops and the firemen and all of the government employees are going to be out in the streets, trying to rob anyone with money because the government promised them a bunch of money that they didn't get. That worries me. Government debt's irrelevant. The government can always print more money. And also, please name me one country that's going to come to America to collect on the debt. North Korea. Right. North Korea is going to show up here. Again, it's not the movies, guys, right? Like, who's going to show up? And I don't think I don't think we owe any debt to North Korea, right? No one is showing up here to collect on the debt, right? No one's going to show up here like we showed up in Iraq. It's not going to happen. This is just not going to happen, right? So national debt is nothing to worry about. The bond bubble is something to worry about, but the bond bubble is going to drive the stock bubble, right? Because as 10 times more money sitting in bonds, as the bonds lose prices, the bond managers start to sell the bonds, fueling the drop in bond prices, fueling more selling of the bonds. Where is that money going to go? It's probably going to go into the stocks. All right, next, what do we got? Another tip question. Thank you. Everyone here, just remember to do good things for each other during times like this. Also, Tone and Ozzy should arm wrestle. I don't arm wrestle anymore, guys. The reason why I don't arm wrestle anymore is because I used to arm wrestle. And some people have gotten hurt. I'm actually very good. As skinny as I am, I used to be in good shape. But
you just kind of act like you would have won, but didn't accept the challenge. Is that what you just did?
Do you really want to arm wrestle?
No, I don't want to arm wrestle, bro.
I entered a few competitions back in college, and that was one of my hobbies. So yeah, I try not to arm wrestle anymore. Then Ozzy lost a lot of weight, so
we'll arm wrestle at the bar. We'll tell you all about it tomorrow.
Yeah. I don't arm wrestle because I can get hurt. Like, arm wrestling is all fun and games, until one of my friends actually in a competition that he entered literally had his arm snapped. Yeah, it can get bad. Like arm wrestling can get bad, especially if you're arm wrestling with people that know what they're doing and you don't. It's all fun and games until people actually get hurt. And I've actually hurt one of my friends as well, who's significantly bigger than me in arm wrestling too. So it's like I said, it's all fun and games until you start arm wrestling people that know what they're doing, because there is strategy involved. Tone, is your indicator a custom indicator of TD? Yes, it is. On TradingView, what would you say is the best one to use? Mine, but it's not free. Did you make your purchase one? Yes. All right. What do I think of spoof trading in crypto? I mean, I don't like spoof trading, period. It's very easy to eliminate. If an exchange wants to eliminate it, just put in a time limit of like a second so that you can't micro trade, and then put in a little transaction fee to cancel your trade, even if it's like 0.001% or 0.0001%, right? As long as you put some kind of a fee for canceling orders, your bots will not be able to do it, and their spoof trading is gone. Okay, it will never affect the traditional trader. All right, guys. On that note, Ozzy and I are off to the Staples Center, and we'll see you all in the next one. Any last words?
Good night, guys.